Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. AI bets unwind. Asian stocks slump after the S&P 500's worst day since December 2022 as investors go negative on tech. The yen surges on speculation the BOJ will raise rates. President Biden speaks for the first time since ending his re-election campaign, telling voters it's time for younger voices to take over. Reports say Barack Obama will endorse Kamala Harris for the White House.
I've decided the best way forward is to pass the torch to a new generation. That's the best way to unite our nation.
And it's a $2.5 trillion Thursday. That is the market cap of firms reporting on the busiest day for European earnings. We're going to bring you results from Roche, Nestlé, Stellantis, and more. And those numbers breaking right now. We go to Nestlé with the results. The focus, of course, on this business around volumes, around pricing, and around margin as well. In terms of the latest results, the line, the redhead for Nestlé, seeing full-year organic revenue of at least 3%, an increase of 3% in terms of full-year organic revenue for Nestlé. It had seen growth of around 4%, so it has downgraded its outlook in terms of full-year organic revenue to an increase of 3% from a target or at least a view of around 4%. It sees underlying EPS growth at mid to single-digit range. In terms of first half sales, 45 billion Swiss francs, essentially in line with the estimates, just a little below the estimates, marginally. Underlying trading operation margin, by the way, for Nestlé in the first half, coming in slightly above the estimates at 17.4%. We switch now to the private bank and the wealth manager of Julius Baer. In terms of the first half numbers for this company that, by the way, has seen its stock gain around 16%. Year to date. In terms of net new money, this is where the analyst focus had been. That is a gain. That is beating estimates at Julius Baer in terms of net new money, gaining 3.7 billion Swiss francs. The estimates had been for 3.3 billion Swiss francs. So Julius Baer, first half net new money, really important for this business, coming in higher than estimates. Adjusted pre-tax profits, by the way, a little softer, but the net new money is a beat for Julius Baer. We switch focus to the drug makers and Roche, also, of course, based in Switzerland. The focus, of course, on the pipeline. This company stock year-to-date up 16%. They are going to further increase their dividends in Swiss francs. In terms of the outlook, Roche raising its 2024 sales outlook. There's a focus, of course, on that key Avastin cancer treatment, one of the portfolio and pipeline for Roche. Second quarter sales coming in above the estimates. It's a beat for Roche, and it's a raise of the outlook for 2024. We'll get you more details on that. Lifting as well their full-year core EPS guidance. So a decent net set of numbers and a positive outlook for the Swiss drug maker as well. In terms of the semiconductor space, we switch focus now to ST Micro, listed in France, of course. The redhead for ST Micro sees full-year net revenue of $13.2 billion to $13.7 billion. We know that there has been a focus on the relative softness in terms of the industrial demand and the autos market demand for the chips produced by the likes of ST Micro, their clients and customers, including the likes of Apple and Tesla. Full year, they see full year net revenue, again, of a range of between 3.2 billion to 13.2 billion to 13.7 billion. In terms of the gross margin, by the way, that is a miss, coming in softer than estimates. And in terms of the second quarter net revenue, essentially in line in terms of the second quarter. But it's the guidance looking ahead that will be important, of course, to analysts there. It is a miss in terms of the forecasts for ST Micro around the third quarter net revenue. There's plenty more of great guests, by the way, coming on to talk about these results on Bloomberg TV today as we break down a really essential European earnings day this Thursday. Starting from 7 a.m. UK time, we're going to be hearing from top executives from Julius Baer, Orange, AstraZeneca, of course, within the drug space as well, and Roche on the back of Roche's beat. Also ahead from 8 a.m. UK time on the opening trade, the CEOs of Anglo American, Unilever and Lloyds. Let's check in on the markets then on a huge day in terms of the earnings front. $2.5 trillion in terms of market cap companies reporting in Europe today, but futures pointing lower by around 0.6%. The AI trade being challenged and in a brutal way yesterday on Wall Street, with the Nasdaq 100 ending lower by 3.65%, the S&P lower by 2.3%, the most since 2022. A reality check for that AI trade. FTSE 100 futures pointing lower by 0.2%. A bit of softness coming through for the commodities market. We keep an eye on that. S&P futures turning around slightly, looking to gains of around 0.2%, but not making up for the losses of yesterday. Not yet, at least. Nasdaq futures also pointed to modest gains of around 56 points. Let's flip the board and look cross-asset. You have seen, in terms of the steepening of the yield curve, that continues. Money moving into treasuries. Look at that. Yields down 4 basis points at the front end on the 2-year as markets ramp up bets on expectations that Fed is getting closer to cutting. The Japanese yen are rallying at 152, gaining almost 1% early in the session, currently up 0.7%. Copper, Dr. Copper, back below $9,000 a tonne, dropping 1.6%. The weakness in terms of demand around China weighing on copper after it reached that record high in May. Brent, $81 a barrel, down 0.8%. Let's cross over to Asia right now. Avril Hong standing by for a check on the Asian markets. In Singapore, Avril, what are you looking at?
Tom, we are seeing a really bad bleed as that AI narrative gets challenged. As you mentioned a short while ago, investors are choosing to pull money not just out of chip and tech stocks. It's spreading to all 11 sectors on the MSCI Asia Pacific. They don't want to take on risk at a time like this. We're seeing the Japanese Nikkei getting really hard hit. The decline today, the biggest we've seen since January 2022. A bit of a double whammy for Japanese equities, not just the tech route, but also the stronger Japanese yen affecting the export-related stocks. South Korea's Kospi seeing the SK Hynix stock slipping as much as 9% at one point earlier in the session, despite solid earnings from the chipmaker. That gives you a sense of the sentiment in the market. And in some ways, we already saw Chinese markets getting a head start on the selling earlier in the week after the third plenum disappointed today. The PBOC surprising markets with a cut to the one-year loan rate. And this is coming just a couple of days after it cut the reverse repo. Chinese banks followed suit with a trim to their loan prime rates. And to some, this sounds like a coordinated effort from policymakers to kind of boost confidence. But to others, this could reek of a bit of risk that the PBOC is a bit panicky, so having the opposite effect potentially. Still very negative on Chinese stocks. Flip the board. Let's take a look at what we're seeing in the FX space. The Chinese yuan has been holding up pretty well despite the easing that we've been seeing from China this week. The dollar slightly softer. A lot of buying going on the Japanese yen. It has its sights, dollar yen, on 150. Started the week at 157. There's no clear catalyst for the moves in the yen this week. There is a lot of vol, so we're seeing that unwinding of the carry trade. Traders bracing for not just rate hike QT next week. Flip the board again. I wanted to give you a sense of the momentum we're seeing in the dollar yen. The relative strength index hitting those oversold levels just gives you a sense of where we're seeing direction as well. Tom.
Avril Hong, always fantastic on these Asian markets. Joining us out of Singapore. Avril, thank you very much indeed. Let's get more details then in terms of China's central bank unexpectedly cutting that one-year policy rate by 20 basis points. It's the most since April of 2020, but it's not been enough, as Avril was pointing out, to boost the sagging global stock markets, or at least the Chinese markets, certainly. Let's bring in Bloomberg MLive strategist Mark Cranfield. Mark, does this move from the PBOC reek of panic to you?
Investors are certainly a bit concerned. Is there something much worse going on with the Chinese economy because of the way these interest rates are being delivered? So we had the easing at the beginning of the week. The reverse repo rate was cut down to 1.7. And that's the tool that the Chinese central bank is trying to focus investors' mind, that they're going to steer policy by short-term interest rates. They're going to steer away from some of these longer rates. The minimum lending facility, the one-year rate, had previously been seen as a kind of a benchmark. But the PBOC wants to shift. Like most major central banks, they want to focus on the short-term rates. So they did that at the beginning of the week, and they've gradually been tidying up, as you were saying earlier, with the other rates coming into line as well. But the trouble is they've been stringing it out over a series of days. The equity market has continued to fall. Since we had the third plenum, the messaging from there and the big decisions made don't seem to have excited investors at all. And now you're getting these little rate cuts coming as well. So people are beginning to think, well, if we can't even get any momentum from the big decisions out of the Chinese leadership, then there really could be something very bad coming down the pipe. It suggests it's going to take a very long time to rebuild the Chinese economy, so the central bank is doing what they can, but it's almost like pushing on a string. Sentiment is bad, this isn't improving it, and now people are beginning to wonder, well, how long will it be before we can even get an equity market rally?
OK, so from surprise rate cuts in China to the AI trade unravelling overnight in the US, Mark, is this a turning point in terms of the AI trade or just a bump in the road?
We probably will only know that for sure and when we get to NVIDIA. But here's the problem. NVIDIA results are a month away. In the meantime, we're going to get Apple, we're going to get Microsoft, Meta. All of the big guns are still to report. So the season hasn't started well. As you say, the massive sell-off already, and we haven't even got halfway through the major companies. And because NVIDIA, who has been the one that's bailed everybody out, basically, they're the one that keep on beating expectations and looking good for the future. But it's still a month until they do. So in the meantime, people are going to be very cautious. It's going to be quite tough unless there's something surprisingly good comes out from the other major companies. In the next few days, people are likely to take a very cautious approach until they see what the most important company has to say at the end of August. That means there's going to be a cloud over the major tech stocks for some time. That in turn will spread over other markets. We're seeing it's gone way beyond AI. You can see now that it's becoming a profit managing situation. People are now they're cutting positions across the board, whether it's in cryptocurrencies, in gold, in commodities, in currencies, anything here to try and restore some P&L. Today, a big hedge fund manager reminded me of a famous quote that if you have any position you don't love as much as your mother, it has to go today.
OK, we love that quote. Bloomberg M-Live strategist Mark Cranfield. Brilliant. Thank you very much indeed. With mothers in mind, of course, as we look at this rout across these global markets, and maybe a pain point as we lead up, of course, to those NVIDIA earnings, not until August. That's going to be challenging. Right, to the politics of the US right now. President Joe Biden has made his first public remarks since ending his re-election campaign. Speaking from the Oval Office, the president framed his decision as a bid to unify the nation under a new generation of leaders.
I've decided the best way forward is to pass the torch to a new generation. That's the best way to unite our nation. You know, there is a time and a place for long years of experience in public life. But there's also a time and a place for new voices, fresh voices, yes, younger voices.
Well, let's get more from Bloomberg's Vonnie Quinn, standing by for us with the details. Vonnie, what stood out to you then from this speech by Biden?
Well, you mentioned the passing of the baton to a younger generation, Tom. I think that was crucial. But it was also sort of a passing the baton to the American people, right? It was a speech that was very strong on the defense of democracy. President Biden actually said, I'm quoting, "The great thing about America is here, kings and dictators do not rule, the people do." So that was really a very pointed criticism of perhaps some of the other candidates in this race. He did talk a little bit about his achievements to date. I mean, there are 6 more months to go in his presidency, so I think he didn't want to make it a nostalgic type of, run through all of his achievements speech. But he did say that the racial wealth gap had narrowed, that the US was now leading the world in chips and science and innovation, lowering prescription drug costs and so on. So he took away the focus from any kind of fragilities that Kamala Harris might be perceived to have and focused them on the strengths of that campaign and of his administration. And I do want to point out that the good news seems to keep coming for Kamala Harris at the moment. NBC reporting in the last hour that Barack Obama, the former president, is very close to publicly endorsing Kamala Harris as the top of the ticket candidate. He had privately been doing so all along, according to NBC sources, and has been in contact with her on a regular basis since Sunday.
OK, and meanwhile, we've been hearing, of course, from former President Donald Trump and, of course, the contender for the Republican Party. Let's take a listen to what he's been saying.
If you want socialist health care, nation-wrecking inflation, the death of American energy, and a lying radical left liberal San Francisco extremist as your commander-in-chief, then Kamala Harris is your candidate. She's the one for you.
OK, former President Trump there. Just a bit of a fact check, because the US is now pumping more oil than it has ever done, oil and gas, under, of course, President Biden, with Vice President Kamala Harris. In terms of the Trump lines, the attack lines on Kamala Harris, what's kind of standing out to you? What's resonating at this point?
You had so much in just that one paragraph alone, Tom, right? Including the mispronunciation of her name, which is extraordinarily insulting to do to another candidate, right? But, you know, he had attacked her on her green energy past, on border. That's going to be a very significant place where she will be perceived to be vulnerable and where Donald Trump intends to attack her. That's one of the reasons why Senator Mark Kelly is being perceived to be one of the top picks for VP, because he's from the border state of Arizona. But you heard him saying there she was, you know, radical left, a radical left lunatic, and more to the left than Bernie Sanders on economic issues. This is scaremongering. She hasn't even come out with her economic platform or her economic agenda yet. Never mind all of the other parts of her stump speech that we are going to start hearing as time goes on. We don't know who her advisors will be. She has so many people to actually hire. So these are all criticisms that are coming, trying to get in before we have any kind of defence on the part of Kamala Harris, right? And this was another rally in a swing state, Charlotte, North Carolina. Trump looking now to at least 2 debates, possibly 3. Fox has proposed another debate, and NBC reportedly also wants a debate.
OK, Vonnie Quinn in Washington, D.C. Thank you very much indeed for the latest out of the US. Plenty of great guests, by the way, on Bloomberg TV today, of course, as we get European earnings. Back to those details, starting from 7 a.m. UK time. We're going to be hearing from top executives from Julius Baer, Orange, AstraZeneca and Roche. Also ahead from 8 a.m. UK time. On the opening trade, the CEOs of Anglo American, Unilever and Lloyds. Coming up, Israeli Prime Minister Benjamin Netanyahu gives a fiery defence of his nation's war in Gaza. We have more on that speech to Congress next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Benjamin Netanyahu has given a fiery defence of his nation's war against Hamas. In a speech to Congress in Washington, the Israeli Prime Minister asked the US to fast-track military aid and praised President Biden for his support so far.
I thank President Biden for his heartfelt support for Israel after the savage attack on October 7th. He rightly called Hamas sheer evil. He dispatched 2 aircraft carriers to the Middle East to deter a wider war. And he came to Israel to stand with us during our darkest hour, a visit that will never be forgotten.
OK, for more on this, let's bring in Bloomberg's Jumana Basecci in Dubai for the details. Jumana, of course, this isn't the first time he's addressed Congress, but nonetheless, it's pretty significant when you get a foreign leader standing in Congress giving one of these speeches. What kind of stood out to you? What were the key highlights?
And indeed, it was the 4th time the Prime Minister had been invited to deliver a speech to Congress. It was almost an hour long, and he used it to launch a staunch defense of Israel's war in Gaza, painting it not just a battle against Hamas, but also as a battle against Hamas's ally, Iran, warning that Iran will also look to destroy the U.S. as well. He used the speech to urge the U.S. to fast-track military aid, dismissing concerns about the mounting civilian casualties. Over 39,000 Palestinians have been killed since the start of the war. This is a direct quote. He said, "Give us the tools faster and we will finish the job faster." What was not mentioned was any talk of the ongoing ceasefire discussions. He didn't reference at all Biden's ceasefire proposal. He did, however, refer to ongoing negotiations and talked about his ultimate vision for Gaza, which is one of it being fully demilitarized and de-radicalized, but that would only happen once Hamas had been totally destroyed or they had achieved, quote unquote, total victory. Now, of course, the backdrop to this, Tom, is that there had been a lot of controversy into the event. Several Democratic lawmakers decided not to attend the event, including former Speaker of the House, Nancy Pelosi. She decided to boycott AOC as well. A Palestinian lawmaker, Rashida Tlaib, was there lifting up a sign saying war criminal on it. So very controversial. A lot of demonstrators speeches were outside, numbers being put to the thousands. But the Prime Minister also took aim at them, saying that any of those demonstrators are choosing to stand with evil. They stand with Hamas. These protesters are standing with rapists and murderers. This is a quote. They should be ashamed of themselves. So he was really firing on all fronts. Very fiery speech delivered by the Prime Minister. But ultimately, what he was looking to do was to remind everyone in the U.S. and back home that Israel still should be very much on people's agenda.
And Jemana, how did the domestic politics of the US, I mean, part of that is playing out on the streets, as we see in terms of the protests, but in terms of what we're seeing from the two main parties, the Republicans and the Democrats, the tumult, frankly, that we've seen over the last few weeks, how did that kind of play into his speech?
Well, it's interesting because in the speech, he thanked both President Biden and President Trump. So he thanked President Biden for the support that the U.S. has offered to Israel since October 7. He also expressed his relief that Trump had survived the assassination attempt, but also said, I want to recognize President Trump for all of the things he did for Israel, from recognizing Israel's sovereignty over the Golan Heights to confronting Iran's aggression and to moving the American embassy to Jerusalem. So listing some of Trump's achievements, so to speak, within the region. But one person who was not there was VP and presumptive presidential candidate Kamala Harris. She actually had another conflicting engagement that had been in her calendar from long before a campaign rally in Indianapolis. She will be meeting, however, with the Israeli Prime Minister this afternoon alongside President Biden. And then tomorrow, Netanyahu will pay a visit to Mar-a-Lago to meet with President Trump. So what he's trying to do here is appeal to all sides of the aisle and to make sure that the speech yesterday was one that could be perceived to be bipartisan and not warmer towards either side of the aisle.
Yeah, not wanting to pick sides at this delicate moment in terms of US politics. Jemana Besetchi, thank you very much indeed with the analysis on that speech, joining us out of Dubai. Coming up, back to the earnings story. Renault reporting its highest ever profitability in the first half. We're also on the lookout for earnings from Stellantis, of course, the company behind Jeep and Fiat and others. We're going to discuss the auto sector next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. A big day for the earnings story. Just a correction on Roche. They have raised their profit forecast for the full year, but they have maintained, not raised, their sales outlook for 2024. So that's the correction. They have maintained their sales outlook for 2024, but they have raised their profit outlook for the full year. And it was a beat coming through top line for Roche. Coming up, we're going to be talking about Nestlé and breaking down the earnings on that key consumer-facing company, cutting its full-year sales guidance as price rises ease off. We're going to have more on the world's biggest food company next. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. AI bets unwind. Asian stocks slump after the S&P 500's worst day since 2022. as investors go negative on tech. The yen surges on speculation the BOJ will raise rates. And President Biden speaks for the first time since ending his re-election campaign, telling voters it's time for younger voices to take over. Reports say Barack Obama will endorse Kamala Harris for the White House.
I've decided the best way forward is to pass the torch to a new generation. That's the best way to unite our nation.
And it's a $2.5 trillion Thursday. That is the market cap of firms reporting on what is the busiest day for European earnings. The world's biggest food company cuts its sales guidance as price rises ease off. We're going to break down the details from Nestlé. Before that, though, some numbers crossing in terms of the autos sector, and it is a miss for Stellantis, the company, of course, that includes the brands and the models, including the likes of Fiat, including the likes of Jeep and Chrysler. Stellantis' first half net income coming in at 5.65 billion euros, well below the estimates of just shy of 7 billion euros. The earnings plummeting for this business in the first half, and a lot of that has got and focused on the weak sales picture in the US. There's been a build-out of inventories in terms of the dealerships in the US and that network for Stellantis, and they have been hit by the softness in the US market for a number of their brands. They've reiterated full-year positive industrial FCF expectations, but it's the top line in terms of the net income for the first half that is a significant miss for this automaker. Talking of the auto industry, we'll move on to Nissan over in Japan because that stock is taking a hit. It's currently down close to 10%, falling 9% Nissan over in Tokyo on the back of a miss in terms of their earnings. Again, they are seeing softness in the Japanese market. They're seeing softness in the Chinese market. And again, there is the weakness when it comes to the US part of that exposure for Nissan. They will continue, they say, the optimization of their inventories. They do see sales and profits improving in the second half as they push out some new models. But in terms of auto sales for the full year, they're looking at sales of around 3.65 million units. That was below the previous guidance of 3.7 million units. That is the top line from Nissan. Again, the shares slumping over in Tokyo as they cut their full year operating income forecast at the Japanese automaker. To the drug makers now. And Sanofi, of course, are listed in France. We broke the details around Roche earlier in the show. The focus, of course, when it comes to Sanofi is the pipeline of new drugs and the details as well in terms of how that is shaping up. In terms of first quarter sales coming in at around 10.7 billion euros for Sanofi over in France. The redhead across the terminal is that this company is raising its full year business EPS, earnings per share growth, XFX guidance, so it has raised its guidance in terms of full-year EPS. So it's a strong picture coming through in terms of the outlook for Sanofi. In terms of R&D expenses, we know this is important for analysts looking at this business, coming in at 1.7 billion euros, essentially in line with the estimates. And that key drug, Dupic Xense, is, of course, part of their asthma drug pipeline. Net product sales for that business and that drug coming in at 3.3 billion euros above the estimates. But the redhead for Sanofi raising their full year guidance in terms of EPS for 2024. Let's get back to the markets more broadly then. And of course, investors will be shaping up and taking into account all of the earnings stories. Currently, European futures pointing lower by 0.6%. We had the rout in tech stocks overnight in the US with the Nasdaq 100 falling well over 3%, 3.6%. The S&P as well taking a huge hit, one of the biggest hits since about the end of 2022. Has the AI rally run out of steam? European futures pointing lower by 0.6%. The FTSE 100 down by 20 points in terms of the futures picture. S&P futures looking at a modest turnaround, just shy of 0.2% in terms of the gains. Nasdaq futures pointing higher by 42 points. Let's flip the board and have a look at Treasury yields and the Japanese yen, because that currency is on a tear. And it's not often we've been able to say that. 4.38 on the US 2-year. Money moving back into treasuries. Yields down 4 basis points on increasing bets that the Fed will be compelled to move. We have GDP data out later today, and then that key PCE inflation gauge out on Friday. 152 on the Japanese yen, strengthening 0.7%. Is this a pivot moment now for the Japanese currency? We'll look ahead, of course, to the BOJ and that decision next week. Copper moving lower by 1.8%, comfortably below that $9,000 mark. It had crossed, of course, record highs back in May, and it's since taken a turn lower on the back of weaker demand out of China. $81 a barrel, meanwhile, on Brent. Oil down 0.8%. Let's get more details on the auto industry then and tie in the data and the earnings picture from Stellantis, Renault and Nissan. Renault reporting its highest ever profitability in the first half as the automaker benefited from healthy demand for more expensive SUVs. But within the last few minutes, of course, as we've been discussing, Stellantis reporting net income well below estimates. So it's a bit of a divergent picture, it seems. Who better then to break all this down for us than Bloomberg's Craig Trudell, Bloomberg's car czar, who heads our global auto coverage. Craig, let's start with the Stellantis numbers before we get on to Renault then. What kind of stood out to you from these numbers? There's the softness, there's the weakness in terms of the US market, there's the build-out of the dealership inventories. What was the key drag on Stellantis in this quarter?
Yeah, I think you hit it there. I mean, the concern for weeks now has been stacking up about the fact that Stellantis has been, I would say, just the least disciplined among the major players in the U.S. market in terms of maintaining their inventories and overbuilding. There's been, executives leaving that company left and right. It was really a remarkable, execution story for quite some time. And that's really sort of, broken down. And I think, when we look across the companies reporting this morning or late yesterday in the case of Renault, and even Renault, strong results in terms of profitability, but this was not achieved by way of volume. And so I think consistently we're seeing, kind of an issue of, companies not being able to sort of count on demand being there. And no longer in a state of, if we build it, we've got demand for it. We're starting to see, some, kind of cream rise to the top. And I think Nissan and Stellantis, unfortunately, have not been executing the way, say, Toyota or even a General Motors has in the last, quarter or couple of quarters.
That's really interesting that you put the spotlight on the question around execution and how these businesses are executing in what looks like a more challenged environment. You talk about the difference then when it comes to Renault. Are they executing? Is that where the driver has come through from this? Excuse the pun, but their profitability coming through pretty decently in terms of the first half.
Yeah, I think this was a company that had a lot of issues before Luca De Meo came in, and I think he's gotten a lot of credit for really, turning the company around, bringing costs more in line, but also, getting more out of higher trim models, out of more profitable SUVs as opposed to on the passenger car side. There is some, something to be desired in terms of electric vehicles. And, it wasn't so long ago that they were trying to spin out the EV and battery business. And that really, in retrospect, it was a good thing that they didn't move forward with that, because I think there are still concerns about their ability to deliver on that business. But sort of a similar story to GM, where the sort of old school business, if you will, the SUVs and gas powered vehicles is really holding up well as the company has some challenges with making the transition to EVs.
Craig, you spent a lot of time of your career, a big part of your career in Japan. You understand Japanese automakers like many other people do not. You understand the story around Nissan, and you've followed it through and across many a year. In terms of this company then, full-year operating income forecast has been cut. It's missed its estimates. What is Nissan doing wrong?
I mean, this company, to be honest, has been a mess. In the wake of Carlos Ghosn coming down, it's really been a pretty consistent story. When you look at Renault and Nissan and compare these two, it used to be the case that Renault was kind of the ugly stepchild of this alliance. This alliance has really sort of fallen apart, and Nissan, frankly, has looked lost. And product-wise, they don't have a great story to tell. They really have some issues with an age lineup. You look at the Infinity luxury brand, and you really sort of kind of scratch your head at what the strategy is there. The electric vehicle, efforts at that company have not been strong. And so I think, it's hard, honestly, to find a sort of silver lining here, where this company's, shares also, reflect the fact that they've had issues from a volume perspective, execution, branding. It's really sort of across the board, unfortunately.
And talking of the shares, currently down 7% in the session over in Tokyo. This is what you get with Bloomberg, and then you get the straight-talking analysis. This company is a mess. Craig Trudell on Nissan, Renault and Stellantis with a wrap of these automaker earnings. Craig, always excellent. Thank you very much indeed. Let's switch focus now to a key producer of food, of course, in terms of the consumer side. Pet food as well, by the way, and coffee, Kit Kats. Nestlé cutting its full-year sales guidance as price rises ease off. Good news for consumers, less good news for Nestlé. Then the world's biggest food company now expects sales to grow at least 3%. That's lower than the roughly 4% it had previously targeted. For more, let's bring in Duncan Fox from Bloomberg Intelligence. How challenging is this then for Nestlé at this point?
It's challenging. It's challenging for everyone at the moment in the food industry because pricing had to go up for 2 years, and you're talking about sort of 8-10% for 2022 and 2023, and consumers got bruised. So, they really have to now show that the volume can come back. Luckily, it did in Q2 quite strongly, thankfully. And they've just got to make sure investment, so advertising goes up, so that we buy their brands rather than cheaper own label brands.
So they were pushing up prices 8 to 10%.
Yeah.
They've got the volume back now. What does that mean for prices as consumers become that much more sensitive?
It basically means they will not be going up a great deal. Costs are basically flat, so that's the good part. They don't need pricing anymore. So they've done that. It's now about driving volume going forward, and mix in particular. And it looks like mix is quite good in these numbers from what I can tell. I haven't read them absolutely extensively, but it seems that they're selling the premium products because coffee and pet food are doing quite well.
Yeah, so that one of the analyst notes I read prior to these earnings was keep an eye on the pet food part of the business and the coffee part of the business because of the strength of margins historically within those parts of the business. Are those two units holding up at this point? What is the margin story looking like?
The margin was slightly better than analysts expected by about 10 basis points, but given that they pushed marketing up 100 basis points, that suggests to me they really are focusing on the premium brands and therefore getting the profits through. So the fact that pricing's done really should give them good news for the future. Obviously, in the short term, they've taken their numbers down by roughly 3% by the looks of it in terms of the earnings. So there's a short-term negative, but on the long term, reasonably solid, I would say, from Nestlé. But it's a problem for the whole industry at the moment.
So not necessarily panic stations for Nestlé as the volume growth increases, but prices are going to have to come in a little lower. Duncan Fox, thank you very much indeed with the analysis from Bloomberg Intelligence. Coming up, after years of preparation, the Paris 2024 Olympic Games finally open tomorrow. We are live in the French capital, hearing from Céline Méchain from Goldman Sachs. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Thursday. Now, people have been flocking to Paris this week ahead of the Olympics opening ceremony. That is tomorrow night. The Games expected to bring in more than 10 billion euros for the French economy. They're happening, of course, amid a backdrop of political turmoil in the country, with President Macron postponing the formation of a government until after the athletes have gone home. Let's bring in our very own Caroline Gonat for a preview, standing by with a really great guest in Paris. Caroline.
Tom, we're one day before the opening ceremony of this 2024 Paris Olympics, and what a better person to talk to than the Goldman Sachs Paris office co-head from this beautiful terrace of the Goldman Sachs Paris office. Céline Méchain, thank you very much for being Bloomberg TV today. Is the whole of Wall Street here in Paris for the Games?
Good morning, Caroline, and nice to see you. I wouldn't say the entire Wall Street lineup is here, but the world is certainly coming to us, and it's a huge pleasure to welcome for us our CEO, David Solomon, as well as Richard Nader, who is the CEO of Goldman Sachs International, amongst other of my senior partners.
surely you're going to have a lot of clients meeting during these few days of the games. A lot of the executives are here. We've had 1 month of political uncertainty in France, a lot of volatility on the financial markets. Is that over? Are we going to see a boost during those games of the French financial markets?
So the latest political developments were certainly unexpected, and we are still waiting to see which government we're gonna have. I don't think it's gonna change our policy or strategy for Paris, simply because the Brexit moves were decided in 2016, a long time ago, and it's translated into moving, more than 420 people in this office. But I would say from a business standpoint, it's sort of created a volatility, and certainly it might translate in delaying a number of transactions.
Oh, okay. And does that mean that given the President Macron has called for this Olympic truce, we're going to have this delay for at least a couple of months until we get more clarity on the next Prime Minister?
Yeah, I expect the uncertainty to be lifted in September post-Olympics, once the new government is appointed. So I wouldn't say several months. I would just say over the summer period. But the Olympics is a net positive. The world has its eyes on the country, and business-wise, I think it can only be positive.
It's estimated, actually, that the impact on GDP in France would be about 10 billion euros. Is that significant?
That's significant, absolutely, yeah. Particularly in a country that needs to address its deficit.
And in fact, the French finance minister has pledged to make these games very economical, cheap, I would say. Do you agree that the damage to public spending will be controlled?
I think so. And for people who live in Paris, the city has never been that clean, so it's a positive as well.
Some businesses, though, might be a bit worried about some of the restrictions. We've seen some hotels not at full capacity, some airlines actually saying they're going to have a revenue shortfall. Is it actually all positive for business?
It's an exceptional period, so people need to show, a sense of adaptability, because that's true that, Paris is not functioning exactly as usual. But I do think that having so much advertising, so much focus on the French economy can only be a positive for all of us.
You're a specialist of M&A and private equity. What's your outlook for M&A private equity in the second half of this year, given we're going to have possibly 2 rate cuts by the end of the year?
Yeah, so we are in a year of recovery from an M&A standpoint. The volumes are up in H1 by 40%, number of transactions up 28%. So the expectation that the interest rates would decrease has boosted the activity compared to 2023 across corporates and private equity investors. So I can only hope that this is going to continue in H2. We are more or less back to the statistics we had in 2019, which was the last normalized year, so pre-COVID. The capital markets are functioning. A good example of that is that we managed to price a very big high-yield bond for Picard, French frozen food, just before the elections, and after we priced as well another deal.
Finally, you're a woman leader in investment banking, and do you actually practice any sports? Do you think it's important for women empowerment and to become a female leader?
Yeah, I think sports is essential to practice your resilience and your leadership. So I do horse riding. I love horses. I will certainly be in Versailles during the next couple of days, and I think sports has a lot to teach us in terms of resilience, leadership, and control.
Attending the horse riding in Versailles, that's one of the competitions, of course, we're going to see during those 2024 Paris Olympics.
OK, Bloomberg's Caroline Connor, thank you very much indeed with that interview with the co-head of the Paris office at Goldman Sachs on that €10 billion boost to the Paris and French economy, potentially as a result of these Olympic Games. There's plenty more coming up. Stay with us. This is Bloomberg.
On current facts, I would not cut rates next week. I think we need to be very careful about making the move, especially since when the Fed starts to cut rates, there will inevitably be an expectation of some cascade of rate cuts.
Former US Treasury Secretary Larry Summers there, of course, on the caution around when the Fed should go. A very different view coming through from William Dudley, formerly, of course, president of the New York Fed, writing in Bloomberg yesterday and saying the Fed should cut, and they should cut next week. And his focus was on the unemployment market in terms of the labour market and the softness he's seeing there. One of the key quotes that stood out from that piece for me, although it might already be too late to fend off a recession by cutting rates, dawdling now unnecessarily increases the risk. William Dudley, of course, former NY Fed president, talking about the softness in the labour market and how that can tie into a slowdown in consumer spending from households. And that could, of course, can weigh on business sentiment. And then you get into this vicious cycle, he says, and get into recessionary territory. Really fascinating in terms of the switch of view coming through from Dudley on the need for the Fed to cut and cut as soon as next week. Let's flip the board and have a look at what's happening in terms of the AI trade, because, of course, rates tie into that. But this is more about sentiment and about a softness in terms of the earnings. Underwhelming earnings, not gangbusters from Alphabet, essentially in line. And that has led to some concern. Tesla as well taking a big hit. Has the AI trade hit a wall, or is this a buying opportunity? Nvidia taking one of the biggest downside moves yesterday in the session, down about 7%. We have to wait until August until Nvidia comes through with their earnings. So how much volatility around the tech story and the AI theme before we get clarity from Nvidia? And again, in terms of the moves lower and the context around what's happening in the AI trade, the rotation as well into those smaller and mid-sized caps. Let's flip the board and have a look at what is a tremendous earnings day in terms of the size and scope. In terms of the numbers that have come through so far, it's been a bit mixed, frankly. The automakers of Europe struggling, the drug companies doing a little better. The total number in terms of market cap earnings in terms of coming through today, $2.5 trillion. In terms of the companies and the market cap reporting today. And we'll be breaking those down for you and bringing you the key interviews with CEOs and CFOs from a number of the biggest and most important companies. A couple of the names on the deck here, and then a couple of the names coming up in terms of the executives we're going to be speaking to, Anglo-American, but also the CEOs of AstraZeneca, Roche, Orange. Stay with us on a crucial earnings day for the key conversations. Opening trade is coming up next. Stay with us. This is Bloomberg.